for S3 Partners, the largest, most popular independent data provider on the Bloomberg terminal, and probably one of the best sources of market information you can find out there. Bob is with us today live from his New York headquarters after traveling to London, meeting with clients. We got a lot to get through in a little bit of time, but we're going to do it today. We're going to start right off, Bob, right at the top. I want your, why isn't, and maybe I'm an outlier here. I read social media, it's doom and gloom. I read the front page of the New York Times, it's doom and gloom. Even the Wall Street Journal, like the end of the world is coming. Yet oil is kind of below $100 a barrel. We've been way above $100. Brett Stevens wrote a really good column in the New York Times yesterday, kind of laying out, the sort of the scenario here with this war and with its impact on the economy. It just doesn't meet what's going on in the news. The Dow over the past month, the S&P is down like 4%. I don't know. I mean, depending on when you start the thing, it could be up 2%. You know what I'm saying? We're basically a flat line here. This is not doom and gloom. I don't remember. I don't think unemployment's falling off. We're getting massive unemployment here. I mean, there are some headwinds, obviously, but unpack this. What's going on here economically and maybe market wise?
Well, the story is that, what we do for a living at S3 is to separate a lot of noise from a true signal. Our short interest, long interest, our data products are a true signal to help any investor understand positioning and what that means, how much money is invested. So the indices are masking the rotation between sectors. There's been a lot of carnage in the software sector. There's been a lot of carnage in those financial
But
firms.
that had nothing to do with this war. I mean, that was obviously AI driven.
No, I understand, but the money's still at risk. It's rotated out of software, et cetera, gone into energy, gone into a lot of different defensive sectors. So money's still at risk, I think is the more interesting way to explain why, in spite of a very uncertain world, um, that the indices aren't down 15%. People are seeing that, yeah, if things do spin out of control, oil goes to $200. Oil and gasoline prices are two different things. The United States is actually a net exporter of gasoline. That's number one. Um, People don't think about us as having a chip in this play, but we do. And it's very simple. If we stopped selling gasoline to the world, that would be a very powerful chip to play the table. So there's a 4, 5, 6, 7 degree level dimensional chess that's being played, and the different oil contracts and what will happen to West Texas versus other oil contracts. At the end of the day, you know it depends where you come out on it. I personally believe, just for me personally, um, you have a malign actor that is all over the globe
Yeah.
in a place where they've been destabilized. You can say, yeah, but they have figured out how to use the economy of the world against itself. Yeah, maybe. But my guess is that we're pretty good at squeezing them too. And my guess is also that they're their currency being what it is so weak, their trade partners now being destabilized. All these things are unsustainable over a 90-day period of time, 120-day period of time.
Yeah. I mean,
So
I think people forget, and I think that the media is run by just people that are just, warped against America in so many ways.
yeah, but it's more than that. You and I talked about this a while ago. It is because that they see CNN and CBS, possibly there's rationalization there. They see what's going on in the Washington Post. They don't have the independent byline like you do, where you're on Fox and you're on the Post and you do this podcast and you've got other things going on. You write books. There's a need to put your name on something, and there's a absolute fervent need to put your name on the next crash. And so everybody's running around in private credit. It's not to say there aren't problems in private credit, but the need to foment this narrative that, oh my God, something horrible is going to happen, it it plays. And you look at climate change, you look at doomsday scenario, financial scenarios, that plays in the social media attention game. They know it, and that's why they play it, and that's what gets the clicks. And that's what makes separating the noise and the signal so hard, is because your frontal lobe in your feed is dominated by stories that focus you solely on what that is and make
Right.
you forget that there's a time sequence. There's so many other things at play. You're almost better off just putting the phone down, letting things play out, and doing your own business.
And we should point out that it's very algo driven and it's headline driven off these headlines. And a lot of times these headlines are written by people that, let's face it, they're a little biased against Trump. Everything he does is through the lens of he's a nincompoop and he's always screwing up, which we know is totally not true. He didn't get there by being stupid, and by the way, oil is not at $150 a barrel right now. It's barely at 100, and despite what's going on, and so I would just say Ken Fisher had a nice column the other day where he said,
Yeah.
he's a smart guy, thoughtful guy. He said exactly what you just said. Try to take a longer view here. Oil could go down to $50 a barrel the minute they open up the Strait of Hormuz. Now, I've read where, oh, even if they open it up, it doesn't matter because oil won't get out. Of course it does matter.
Sure it does.
It's the perception matters, and that changes the perception on its head. So I would just say there are two types of traders in here. There's two types of investors in here. There's the trader. There's the investor. If you're an investor, think long term. This thing could be really good. Obviously, there's always a chance it spirals out of control. World War III. I mean, okay. I mean, I get it. I get that. But those are very, very existential fears and sort of out there outliers. The reality is, Trump is probably not going to do this forever. He's already made his point. As Jack Devine said, the Strait of Hormuz is going to be open at some point. They're not going to let it not. And, we're just going to move on. We're going to muddle through as we always do. So just be long term. If you're a trader, that's why we got him, the granddaddy of data. Anything good this week? I mean, you've been running around.
Yeah. So, well, we have one pick this week, which is McCormick and Co. It's a bearish pick. It's a global leader in spices, seasoning, and flavor solutions. It's
I
my
know. I love it. I
yeah,
use
you
it.
use it, right? The price is down 25% in 3 months. The short interest is up 27%.
MKC is the symbol.
Right? MKC is a symbol, and shorts are adding as the stock slides, and you can see that clearly on the chart here. If we could just go back to that slide for 1 second, and the earnings report will come out next Tuesday before the market opens. So we have a bearish pick on McCormick and Co. If we go to the next point, there's look at the global shipping. We talked about this last
Oh
time,
yeah, yeah.
and things are still pretty bearish, across um, um, across the shipping sector. Maersk is at 25% of the float. It keeps building on container oversupply, right? And so, and there's $3.6 billion worth of shorts in the sector, and it says the trade's not done. And if you look at that Z-score, we get a lot of feedback on that, by the way.
By the way, Bob, stop you right there. Is there a short squeeze potential if the war turns out positive here or something in the short term?
Well, if the war turns out positive and the Hormuz opens, yeah, you would see a lot of short covering there, for sure. For sure.
Oh, interesting. Okay, there
So
we go.
and
Short
they remain
squeeze
elevated.
possibility.
Right. 100%. It remains elevated. So, Maersk is an interesting example. Um, so you can see that the short interest, that even though the price is rallying, right, which makes this so interesting, that the price is rallying. Um, People are saying, hey, people need to pay more for containers and so on, and therefore that's the bullish case. Um, there's a real battle going on because shorts increase as the price increases. So they're in a longer, more nasty, protracted situation. That is what's going to happen. And, you know, the, 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 the bulls are saying, nope, sorry, people will pay more. There you go.
Interesting. How about any victory laps you want to take?
We didn't have any picks last week, so there's no lap. But you know, we've been on a bit of a tear, Charlie. We really have been. Our picks have been just terrific, and you know, at some point, we're gonna, you know, someone's gonna pick up the phone and say, "Hey, what are you guys doing over there?" We've been making a lot of people a
You
lot of
know,
money.
we're just doing our jobs. I mean, I mean, it's just literally Bob tells the data, tells what's going on, you know, we don't hide when we make mistakes. Everybody makes mistakes. You know, we're all human here. But you know, this is Wall Street is a game of. You know, Ace Greenberg used to say that if you okay, if you have a bad trade, the way to end a bad trade is to sell and move on to your next trade. And you know, that's kind of where we are. We just give you the data, and you know, we know this is an ongoing iterative process, and so just you know, keep on top of the data and keep on top of what we're reporting. Before we kind of, I know we're all in a rush today. It's you know, end of the week. Bob, I want to get some thoughts on the column or the story column I wrote today in the New York Post about that amazing trade that occurred 15 minutes before Trump said something positive on Monday on about the war, which sent oil prices down dramatically and the stock market up. And 15 minutes before that, some guy bought the S&P and sold oil,
Well, we don't know if it's some person
or it might be 10 people. Who knows? Yeah,
or an institution. We don't know the identity of the person.
and you know, I
People
reported
forget, by the
today
way,
that if
macro markets, in
that
macro
trade
markets,
made in
right?
15 minutes $50 million.
Yeah.
And
So,
that's if they sold out of it. We don't know. You know, they
right.
probably did. Okay.
Um,
What do you think? There's a lot of
well,
conspiracy theories out there. I listen. There's a perfectly legal rationalization for this. You know, I do know a lot of commodities traders. They're out there trying to game the market. They're looking for any little edge, and they're willing to do some sort of out of the box things. That was somewhat out of the box. Buy the S&P right then. You know, we came up with a weekend where it was kind of sort of smoldering. Trump saying stuff. You know, we might do this, we might do that, and then he does a 180. But you know, that's what currency traders are paid to do, or all good traders are trying to think outside the market, think against the market, and maybe they found one sort of bit of evidence where they thought maybe they should do this. I just think the illegality, you know, meme that's passed around, you know, yeah, I know insider trading, you know, but, you know, there is a potential logical explanation for this as well.
if the person was a government employee, that is insider trading.
Yes, absolutely.
If they're not in the macro markets, there's really no such thing. So now, here's the thing. Let's say it was a professional institutional investor, and let's say they knew somehow, and let's say they traded on it. Eventually, the name will come out. There are mechanisms in place to find
Oh,
out.
they can find it in a second.
They'll find it.
And they're probably looking at it right now. Yeah.
And so the question is, what will that institutions, investors think about this? My guess is that's pretty negative. So the effect would be the same.
Why would their investors think it's negative? I would think they would think it's positive that they
I think in
have some
today's
insight into that.
environment, anything that's close to that is just it's just a bright line.
Yeah.
People don't
Okay.
want to be associated with it. It it's not that's just not investors. I think would be really I think it'd be a black mark against that institution.
Okay.
So, but in commodity markets, you're a professional investor. Do these things. You know, it's a question of ethics. It's not a question of illegal, and it would probably strike a number of, depending on who the investor is and where, it would strike them the wrong way. Is my guess. But this
Or
idea that this
we don't
idea
know
that
where this
insider
investor
trading,
is, how many
you
they
know,
are right now. We will at some point, I
we
guess.
will at some point in time. If it's a government employee and that has a very wide definition, then yeah, that's a problem. But otherwise, um, it really depends on the investor reaction.
I think there's a logical explanation. I mean, I think, I've been spending a lot of time talking to commodities traders. They're all obviously trying to figure out this thing on very short-term basis. They're all looking for a little bit of an edge. And when you get so many smart people looking for an edge, you think heterodox. That was a pretty heterodox trade. Now the timing looked amazing, but sometimes timing is, it is what it is. Sometimes it was just fortuitous. You don't know.
You don't know. And a lot of people in Washington, this is insider trading. Okay, I mean, if it does seem like there's a lot of polymarket activity around entry, the war entry and exit points that are, let's just say they look funny.
Yeah.
The timing of it looks funny. Now, I'm not going to comment because I don't know the details, but the timing of
That's
it
the
looks
whole
funny.
thing. Things could look funny and they could be completely
Completely looks fine.
innocent and coincidental, and
That's right. So, no one was talking about, uh, when the Treasury employment numbers a year and a half back was released, like a month, what was it, like 2 days early. Um, no one was talking about insider trading. So there's a lot of things happen with economic statistics and government announcements in the macro market that don't apply to public securities. So, like stocks.
and there's always something with Trump where we all know that he thinks out of the box, and you could see him wanting peace and kind of ending this, and we made our point. So I'm listen. I'm just saying both sides here. I've written a book on insider trading. I kind of know how it goes down, and I know I know what a circle of friends means in the insider trading context. And I also know that there are completely innocent reasons why people trade fortuitously before public events. So I
100%.
would just say keep an open mind on this.
Yeah, keep an open mind. It's not necessarily illegality. It raises an eyebrow naturally. The timing is so great, but it doesn't mean anything bad happened, unless something bad happened, right? It depends who the actor is and what their access is.
It is. It does, and I think that's a good note to end this on. Bob, it was great seeing you again. We're going to have a more, next week we're going to dive into some more of your actionable calls. I'm sure we'll have some more data. The news, this is going to be a big weekend for news. I mean, obviously, Trump is now threatening. This is what kind of has me sort of like my eyes. Why I can't understand is like now he's threatening to go full on war, and oil is not at $150 a barrel. You know what I'm saying? So there's
Well,
some.
what do you think he means by full on? Does that mean the
Well, I
UAE?
think he means. I mean, to be honest with you, I
Which is
think
an
he
incredible
means.
thing that they're actually saying, yeah, we're actually with you on this.
I think he means going into that Karg Island and seizing their oil supply,
Yeah.
and then just clearing the rest of the,
But
figuring a way to clear
to
the.
get to Card Island, you have to go through the strait, right? Unless you parachute in, which,
Listen, I saw a graphic on Fox yesterday. We got a lot of ships in that area. I
oh
mean,
yeah,
it's not exact.
yeah.
Did something happen here?
We got audio. We got audio.
All right. Well, Bob, let's end it here because we have a little bit of an issue with my camera for some reason. I think it's I don't know. I think it's probably the CIA or something.
Well, we uh, we got to get a poly market on, Charlie Gasparino. We'll put a
Well, they could see your smiley face, Bob.
exactly right.
All right, let's end it here.
Okay.
Thank you for another riveting edition of Risk and Return for tuning in. We're going to be back next week with a long form edition with Bob's calls, some news. Who knows? We might be at war. I don't want to be at war, but we might be, and it's going to impact the markets. Signing off here, Charlie Gasparone from Fox Business and Bob Sloan from S3 Partners. See you next week.
See you next week.